All right, should we move on to Netflix?
Let's do it.
All righty. Well, Netflix, big news today was they are looking at, they haven't done it yet, they're looking at, it's a deal they put out there to buy Warner Brothers.
Well, their deal was accepted. It's just a question of if
Yeah.
it will be approved.
If it's approved, and that's the thing. So it's not a done deal, but they made the offer. So the offer is there. Now they go through all
Well,
the
the offer is accepted.
Yeah, but now they have to go through the regulatory.
Yeah.
So it may be accepted, but it may not go through. So we'll talk more about that. Let's talk about the numbers if you should buy Netflix here. They're in the entertainment industry. Only short is about 3.5%. People love Netflix. I use it myself, one of the products I use. We do see, unfortunately, they're very expensive. PE ratio is 41.9 versus not material for the industry. And the industry, again, is the entertainment industry. We do see price of sales are expensive, 10.1 versus 2.1. Price of book value is 16.4 versus 3.4. And price of cash flow, 45.6 versus not material for the industry. Now, this is amazing. I mean, those numbers are very high. But their PEG ratio, which is your price earnings divided by growth going forward, is very good. It's 0.8 versus 29.8. Now, they have done a great job of growing their earnings over the last year, up 35.3%, but somehow the industry growth is 84.7%. Different for the sales. Netflix, their sales are up 15.4%, which is very good for their revenue. Industry is only up 2.6%, and analysts love this stock. They say over the next 5 years, the earnings per share growth estimate is 48.2%, about 5 times the industry at 8.2. They still do not pay a dividend. They keep reinvesting into new businesses and keeping the business growing. Let's take a look at the balance sheet. Current ratio 1.3 versus 1.2. That's good. They got liquidity. They've done all their expansion with not much debt. Debt to equity is 0.6 versus 1.3. We do see a net profit margin for Netflix. Wow, 24.1 versus 6.8. They keep a lot of that subscription price that people put out there. We do see return on equity is 40.2 versus 20. Free cash flow is $8.9 billion versus $6.4 billion. I mean, these numbers look pretty good, but let's see what you got looking for. We got a lot of comments on this company as well.
Yeah, I mean, obviously it's a great business. It's just a matter of valuation a lot of times when it comes to Netflix. Because when you look here at the current price of $100.24, it's kind of, I'm going to say, in between. The 52-week range low here is $82.11, and the high is $134.12. But again, the problem is that valuation, as I discussed. You got to December 2026, estimated earnings per share of $3.23. They give you a target sell price of just $53.62.
Yeah, and I love the company. I mean, I've watched different shows on there, but it's still an investment. And we talked years ago about how they do the accounting, and it takes years for these things to show up. Remember, what were they doing? They were actually
amortizing the shows over long periods.
Long period of time when they just don't last that long. Because the only thing I watch on Netflix is the new stuff. I don't want to go back and watch something that's from 5 years ago. I think that's the way a lot of people are. So the accounting, and it could take many years for that to catch up with them. So
I don't know. Sometimes the old shows are good though. I go back and but we just went back and watched How I Met Your Mother. Shows from when I was growing up, because you kind of forget what happened. So sometimes I like to go back in time.
I guess other people feel that way as well. But I there's just so much new stuff coming out that why don't I watch something I've seen already when I see something I haven't seen?
I feel like a lot of new stuff isn't good. I think Netflix produces too much stuff that is not good.
But you've got Netflix, you've got NBC, you've got Amazon Prime, you've got Paramount. I mean, there's, it's my way I settle down at night. I'm usually done work about 9 o'clock, and I want to spend an hour and a half. And I want to watch something new, and, that's what I want to watch. So.
Yeah, I mean, I know there's a lot of people that they like to watch the old stuff too, though.
And a lot of people, I watch about 90 minutes of TV a day just to unwind. I know some people probably watch 3 to 4 hours.
Yeah.
So that could be different. And one that I would like to watch, that's the old side, is, but I have all the episodes, is Seinfeld.
Yeah.
I'd watch those again.
It's a good one.
Yeah, okay.
What I was going to say is I do not like this acquisition.
Oh, yeah, I forgot about the acquisition. I knew there was something else big I want to talk about. Let's talk about the acquisition.
I mean, acquisition, so the way it's looking right now is Netflix will be buying, or the offer that was accepted is to just buy the studio and the streaming service. The cable channels like CNN, gosh, what other ones? TNT, they'll be spun off into their own entity still, and then Netflix would buy just again the studio Warner Brothers and the streaming service HBO Max.
And you know what the value of CNN and TNT was, right? What they're getting that value.
Well, this is where it gets interesting. So the deal first, I'm going to give that is essentially $27.75 a share. Some of that does come in the form of shares in Netflix. So it's $23.25 in cash, $4.50 in the shares of Netflix stock. But this is where it's interesting. Warner Brothers is valuing the spinoff of the cable networks at $3 per share. But Paramount, who is, I'm going to say, salty, not happy about them not getting the kind of go-ahead to buy it, they say they believe the global networks are closer to $2 a share. So they think their $30 a share for the whole company is actually a better deal for shareholders, of course, than what Netflix has offered.
Yeah, and we could definitely see a fight there. And Netflix does have, about $9.2 billion in cash. And there was talk, too, that Netflix is doing this more as a defensive move because if Paramount were to buy Warner Brothers Discovery, they could be more competition they're feeling for Netflix. So this is what I love about these big deals. There's a lot behind the scenes. I remember with Microsoft and Entertainment Arts, I think it was, they bought and stuff. It's
Take-Two.
Take-Two, that's what it was, yeah.
Or Activision.
Activision.
No,
Activision. Activision. Yeah. One of those, Activision.
Is Activision.
Yeah. And it was just fun to watch that, go through the courts and everything. And we were right on that. They actually did have that happen. I think we made money off that because we bought Microsoft during that time.
No, we bought Activision.
Activision, that's what we bought, yeah. So we were right on that one. But same thing here. It's just going to be fun to watch, but there's a lot behind the scenes. And I'm pretty confident that, what is his name? David Ellison, Larry Ellison. I think they'll come back with another bid.
Yeah, we'll see. I think now it's getting to this level where I don't know if it's worth. I mean, essentially $82 billion is the enterprise value. The market value of that deal is $72 billion, but the enterprise value looks at your market cap plus debt minus cash and equivalents. Mm-hmm. And Warner Brothers does have a sizable amount in debt as well. So you're essentially having to pay $82 billion for this entity.
Oh, I forgot about Warner Brothers debt. They did have a lot of debt in their balance sheet.
So $82 billion. To me, for Netflix, a company that doesn't like to go to the box office, are they going to be changing the way they do that, or is it still going to be preserved for really their streaming audience? Netflix historically only likes to release movies in studio or in theaters for a very short time period just to qualify for awards. They don't like the traditional box office. Right. So if they don't go that route, that is a heck of a lot of new streaming subscriptions that you need to sell, or you're going to have to increase the prices to justify an $82 billion acquisition. And to me, they already have so many subscriptions. I don't know if you can get many more. So I just don't see the mathematics of this adding up that favorably for Netflix.
Yeah, and I think there's a lot more from this. And I do think the egos will get involved. I mean, you got, again, I talked about David Ellison, Larry Ellison, and the CEO of Warner Brothers. What's his name?
David Zaslav.
Yeah, he's another one. I mean, you get these big guys, and they want to be the winners. And
Zaslav is the biggest winner.
Oh, yeah, he wins no matter what. I don't think they're going to walk away from the table. So, and he was right on that. And it's just something that there's a lot more to go. And also, too, they said is that if they do stay with a Netflix deal, it's going to take probably at least a year and a half to get through the regulation.
So 12 to 18 months.
There we go. Yeah.
Yeah, because they still have to then wait for the spinoff to occur, and then they'd buy.
Yeah, so that's a long-term thing there. So, but I'd say watch the news. I think this is not over yet. So.